Right, folks, it's Saturday the 8th of September. I'm trying to churn out these videos and reports over the weekend as early as possible so that it gives you time to get ready for the week. This is the dollar index chart, which I've been trying to figure out for a long time where it's going, and as you can see, it's not really going anywhere. I mean, at the end of the day, we're trading at 95.36, and that's where we were trading around this week here in the middle of June. So we've gone up, we've gone down a bit, we've gone up a bit, and we've gone down a bit. You know, all in all, we're just going sideways. It's been a very boring summer and really very little opportunity to run a swing trade. Now, this I do believe is called an evening star. I've decided to remember the names of the candlestick patterns before I do my video. Not much point in me doing that and not remembering them. But anyway, you know what that means. That is a negative pattern. Big blue candle, this shooting star thingy, and the big red candle here. So that should be negative, but we didn't get the big red candle follow through here either. So again, we're just trading sideways. These two dojis on the weekly chart indicate indecision, you know, bulls and bears battling it out. No one's winning. No one's got control of the dollar index. So I'm disregarding that evening star pattern. You could argue that this is a potential head and shoulders pattern going on here. I probably should remove that and put in this if it was to be a head and shoulders pattern. But I think all in all, trying to read too much into this with direction is a waste of time. So we've got some support down here at 95.00, 94.90. That did work this week. We know that we've got resistance up here around 95.70. That did hold last week. I think really trade that range and just wait for the breakout. If we go lower, let's see if what happens at what is possibly a neckline of a head and shoulders. And it certainly would be important because by the time we get there, the 100-day moving average will be a lot closer. So if we were to break 94.50, I think we'll have to take that as a sell signal. We'll worry about that if we get down there, and we'll reevaluate. Right, Aussie dollar, I thought would trend sideways because I thought the US dollar would trade sideways. So I thought Aussie dollar could start to trend sideways. We had this doji candle going on here, followed by a not bearish candle, shall we say. But I proved to be wrong on Friday when the Aussie dollar just collapsed yet again. You can see we've been in a bear trend the whole year, and clearly the bears remain well in control as we plunge to new lows. So there's no reason to suggest that's going to turn around on the weekly chart. If I just scrunch this up, there's just really not any. I can't find any support to tell me this is going to reverse, even though we are getting into oversold territory. I don't really see any reason for the New Zealand dollar to turn around either. We've got to new lows again for the year on Friday, 65.26. We broke the previous low at 65.42. I don't see any reason why we'll turn around with this pair either. There is a potential double bottom if we were to hold. Well, we already had a slight double bottom with the August low, followed by the Sep low. We didn't convincingly break the previous week's low of 65.29. We got to 65.26, but the fact that we've closed near the low of the week, I just don't like the look of it, and I wouldn't want to be long over the weekend, that's for sure. This is a chart of the US dollar versus the Japanese yen. So we had a nice up channel here. We broke the channel. I thought we would go lower. We held this support. That's fair enough. We did trend lower. This looks like a declining wedge. So the break above it appeared to be quite positive. We didn't get very far, and since then it's just been a mess. We've really just traded sideways, and I've said this for a few days now. I just don't know what happens next. We've got the 100-day moving average here, which seems to be holding around the 110.50 area. If we break that, this looks like good support. 110.00, 109.90. We've got the trend line from the declining wedge. We've got the Fibonacci support. We've got the 200-day moving average. If that isn't worth trying along, then nothing is. But other than that, I really don't see what to do in that pair. Euro yen on the daily chart. So we're moving around a bit, but I can't make anything out of this pattern, unfortunately. We've got resistance up here from the trend line going back to the end of April and the 200-day moving average. We bottomed just below it. So even the price action here at 130.86 backs up the resistance just around the 131.00 area, 131.20, but we're a long way from there anyway. The moving average is having no effect whatsoever. I wouldn't know what to do with it. I'm sorry. I know. I really am desperately looking for, well, there's no swing trade opportunities, but even scalping opportunities are getting tricky because there's just too much sideways action going on. On the weekly chart, we've got good support down around the 127.00 area, but we're over 100 pips away from there. So I'll just have to see what it looks like when we get there, but I've no idea what to do with it, I'm afraid. Euro versus the US dollar, we've got the Morningstar pattern here showing a potential end to the bear trend, but with little follow through in the last 2 weeks. I believe we have to disregard that. This is a bit messy. In fact, I'm going to take these trend lines off there. I don't think they're particularly relevant anymore. They are having some effect, but not enough for me to worry about them. I'll take them off. And again, possibly a inverse head and shoulders pattern. I'm not going to read too much into that yet. I think head and shoulders and inverse head and shoulders patterns do not have to be symmetrical, but you can see this is a big old shoulder on this side, so I'm not going to pay too much attention to it. The Fibonacci level here is not having any effect whatsoever. We're up one day, we're down the next. It's messy, and I just wouldn't know what to do with it. I'm doing my best to find some scalping levels, which I've put on the report over the weekend on the spreadsheet. So I think it's just a case of waiting for those, really. I did fear that these markets would go sideways and not do much over the summer, and unfortunately I was right. All I can hope for is that I've saved you from putting on swing trades that would have driven you bonkers, and maybe keeping you out of the market is just as important as getting you in the right places. So this is the dollar versus the US dollar versus the Canadian dollar. We broke above this trend line, which should have seen us head significantly higher, but we just couldn't hold on to the gains. We reversed from 132.26 high of this week. We've got some support down here, as you can see, 55-day moving average, and some trend line support down around the 130.90, 130.80 area. I like the 130 sort of 60, 70, 60 area, no, 80, 70 area, let's call it that. We've got 80 there, we've got 70 there. That looks like good support. Break below 50 would kill that. So this would be the only area that I see worth trading. Let's see if we can hold it and the bulls remain in control. And then if we break below the 100-day moving average around the 130.30 area, I'd have to say that that would open the door for 129.80, 129.90, 129.80. And then down here looks really good, but this is a long way off for some support. So let's have a look at gold. I'm desperate to say something interesting and positive and give you a fantastic swing trade idea, but that's not going to happen in gold, unfortunately. What I can tell you is that the 1206, 1208 resistance worked. I had 1207, 1208, I think. Not 1206, 1208, unfortunately. We topped out just a fraction below 1207, so I don't know. If you managed to catch the short on that this week, well done. It was really the only trade that was worth doing in gold, and there's not much you can do, is there, when it holds within a 20-point range. So this is obviously key again. We're going to have to get up through 1215 for the buy signal. That coincides with the 55-day moving average there, as you can see. Failure to get through that 1206, 1208 area keeps the market under pressure. We are in a bear trend anyway, so I guess we have to assume that we stick with the bears until we break resistance. Break below 1188 could take us down to 1177, and then you've got the trend line down here at 1170. Silver just looks negative. We're consolidating after a significant sell-off, and there's no reason to buy it, so another good reason why gold could come lower. Oil, we had this big reversal, which I think was on Tuesday, which told us that the market had topped near previous highs, and we have headed lower. We've got this hammer. See, I am doing well with my candle names now. We've got this hammer here, but I'm not going to take that as a buy signal. I think that this is just a consolidation phase before we head lower. I think we've got a little bit more of a correction to come. Oil was actually the only thing I traded last week, managed to sell it, and I'm still holding on to that short. I'm not saying we're going to collapse, but I think there's a little bit more downside. We could at least get down to sort of the mid $66 area, 66.40, 66.30, and test this trend line. Maybe I should get out of my short if we get down there. But you can see oil really has just been in one big sideways trend, at least since the beginning of May. So around the middle of that range, maybe get out of shorts and see what happens. E-mini S&P has entered a little correction phase, which I kind of was looking for, obviously. The false break above the trend line, and then we have headed lower. The level seems to be working fairly well. If you're scalping it, most of the support levels have held, and the buyers do come in at the support levels, because this is always a buy the dip strategy in stock market, or US stock markets anyway, certainly not in the European stock markets. We did break the 2870 area, but we only got down to 2865. Maybe we can edge a little bit lower, but I don't see a huge amount on the downside. I'm not seeing any major sell signals. We're just correcting that overbought situation, which is what we really needed to do, and no doubt the buyers will come back in. If we were lucky to get down to 28.30, then it would be a nice buy area, but I'd be surprised if we even got that low.